And my lesson today was going to be on valuations. We use the Warren Buffett's valuation method to decide what kind of stocks we're in, if we like them, how we value those stocks as a stock that has an opportunity for the year. You hear valuations thrown out there a lot. And quoting Warren Buffett, if you don't know what you are doing or how to work the numbers, diversify in an index. But what he's trying to say is if you don't know what you're doing, you go to a mutual fund, you go to an index, you go to an ETF. He suggests you stay away from ETFs and indexes because of the cost involved with them. But he does want you to be in an index of some kind if you can't calculate the numbers. So today I'm going to show you a lot of my work that I've done. And at the end of this, I'm going to close this down and I will attach it as a handout so you guys can use this or grab it at your convenience. But I'm going to give you a spreadsheet. I've done this on hundreds, but we're just going to go over a couple today that are the core holdings of Hurley Investments and why. And I'm going to work with you for the next 20 minutes on finding valuations for companies, what we see and what we've used. I really love Rich Warman. A couple times he said, man, it's amazing. You told me that JP Morgan would go to 170 to 175. And I was like, yep. And I was kind of a week late. But yes, I told you that, and here's how it got there. You told us Apple would go to 200, then it'd probably back off. It did that. I love it. He once told me, how did you know Bank of America would get to 55? And I'm going to show you how I've done it using the simple spreadsheet. And I will upload this spreadsheet so that you guys can download it and grab it yourself and be able to use it yourself as you're looking at some of your own stock positions in your portfolio. But all of my information I've picked up from FinViz. So the information I've gathered for this is right here on FinViz. It's off of the second PE and forward PE, current earnings per share next year. That is where I'm gathering this information. And I'm dating it for today. This information is always changing, but this is my next 12-month expectation or look into the future. If you can see, as we start with the symbol on column A, PE, which is a current price to earnings ratio, the forward PE, what they think it's going to be in the next 12 months. I then put in here the PE that I use to calculate my price. Earnings per share next year. The earnings per share I used to calculate my target price. If you look at my target low, on the low end, how low can Apple get to if it has a really bad year, if there's something that's wrong? I came up with 157. And all I did is I took the lowest PE, whether it's a current or a forward, by the lowest earnings per share. So in this case, I took the forward P of 25.75, multiplied it by the current earnings per share of 6.13. I came up with $157.85. Technically, I should be using a target low of the forward PE to the future earnings per share. But a lot of people talk about using, hey, wouldn't you use your current PE with your current earnings per share? Well, that just gives us our stock price. If we use the current PE and multiply that by the current earnings per share, that should be our stock price. Now, our stock price is a little bit higher because this is a day old. Some things haven't changed, but Apple finished at $185.56 today. Where I'm going for my target low, I'm taking the lowest PE, which is the forward PE, multiplying it by the lowest earnings per share, and that's the range that I have for a target low for the year and a target high. Actually, it's the current PE times the highest earnings per share. Gives me the 212.96. Well, Kevin, that's a big range. And my answer is no kidding. But this is where you have to run your mathematics and where you have to run your own common sense on deciding where you want to judge each individual stock and what you believe. And Rich, I just saw Rich Warren jumped in here. This is where I can surprise Rich, and on a couple times he'll tell me, how did you know that it was going to get there? Well, the numbers tell you that it's going to get there. What they don't tell you is news that could come in that could detract that, wars, economic events. We don't know what can sidetrack it, but I can work the numbers and tell you, hey, this is exactly where it should be. So let me go through a half a dozen with these with you today to give you an idea how I've come up with the pricing for some of our individual stocks. I'm going to start with Apple. Apple has a current P of 29.91 and a forward P of 25.75. To me, that is low. Kevin, why do you think it's low? What's your rationalization behind that? Well, Google's a 26.25 to a 20.5. Okay, Apple seems to be a little bit better than Google. Intel forward PE is a 25.48 right here. Well, that seems a little more in line. Current for Meta's 31, looking to be 20. Kevin, it seems like it's okay where it's at. I put Netflix 47 to a 24.78. Amazon 77 to a 40. I'm trying to find like stocks that come into this position. And for Apple, Apple usually runs on average a 28 to a 30 PE. Apple's PE this year, up to this point or as of today, is a 29.91. So people think going into next year, Apple's price to earnings is going to come down. It's a little interesting because if you look at next year's earnings expectations, analysts come in at a $7.12 price label. But if you know anything about Apple, they usually miss by $1 to $1.50. Their own projections are less than expected, and there are no projections except for growth rates going into next year. For Apple, I use their standard 30 PE. I use their earnings per share where they normally beat by $1 to $1.50. I'm giving them an extra dollar. That gives me a target price for Apple sometime next year of $243.60. That is how I'm coming up with price targets for Apple and where they can be. I'm doing the same thing that Warren Buffett does so that I can just give myself a general idea of where things are going to be. Bank of America, Bank of America closed today at $34.16. If I was to give you some background on Bank of America, its high, the 5-year high is $50.11. And that was back on February 10th of 2022. Currently trading at $34.16. Where would Bank of America go in the future? Its PE sits at $9.44. Its forward PE sits at $10.36. So into a decreasing interest rate environment, Bank of America is expected to make more money. Can anyone explain that? Why is it projected right now that Bank of America can make more money into the future on a decreasing interest rate rather than an increasing interest rate? More borrowers. On a less of a rate, they can borrow more because people think they're getting a deal. I love that. It'll make mortgages cheaper for people. They'll make less money, but they'll have more volume. As I was choosing a PE for Bank of America, the biggest point is if the rates come down, all these bonds that they have there's no market for the bonds that they currently own. They have hundreds of billions of bonds that they blew it and didn't roll it forward. So a lower interest rate, a couple rate cuts coming in will increase their book and give them more money to be able to borrow out against it. As I looked for some of the other banks, Citibank was 8.57 to 9. Key Corp was 11.92 to 11.5. Goldman Sachs is 18 to 11. Morgan Stanley is 16 to 14. So if I use an 11.55 times their next year's projected earnings, I come up with a price of $37.54. That would be a realistic price. If we're going to change this and go to 3 rate cuts, that gives them a PE of a 12.25, which gets them up to $39.81. That would be a realistic target price for Bank of America. I'm going to do Baidu. Baidu, because I like it, has a 12.86 to a 10.78. A realistic average return on Baidu puts a forward PE of 22, and that's less than their 25. If I was to take their 22 PE and multiply it by next year's earnings, that gets me at 234.26. And if I went on the high side where they're at 28, it gives me a 303.24. But I'm trying to be realistic and go on the low side. We've already done Disney. Disney has a P of 70.96 right now. That doesn't work. That is a ridiculous PE for Disney. Those numbers don't add up. 17.34 forward PE, because the numbers are skewed right now. That also doesn't add up because they're normally in a 25 to 27, 28 PE. Part of their PE is based on parks. Six Flags Magic Mountain has a 26.71 current PE. Comcast has a current 12.04. Netflix has a current PE of 47.86, forward to 24.78. As Keith and I were working, Disney, what they have coming up, their movies, their parks, their Disney Plus, we came up with a realistic expectation for a PE to be 30. If you multiply that times the price per earnings in the future of 526, we have a realistic price, target price for Disney at $157.80. If we did Ford, because someone already asked about Ford, General Motors has a 5.13 to 4.7 future PE. Tesla has a 76.76 to 63.26 PE, which is outrageous for not even a 500,000 cars delivered this year, right? And Rivian doesn't have any PEs. They're so in trouble and going to go bankrupt, we don't even have a PE for them. If I was looking at a target price for Ford, I would think they'd be somewhere between 7.8 to 6.64. I would give them a 7. Future earnings per share is $1.79. A realistic price for Ford is $12.53. Ford closed today at $11.97. Why did we get out of Ford? Until they stop blowing $3 to $4.5 billion a year on electric cars that they suck at, their earnings will remain low. You could see a realistic next year PE would be double that, which would be about $3.50. I'm going to keep going through these little lessons. Tonight was valuations. I might even do a valuations part 2 as we work through a couple other numbers, and I give you some ideas on how I'm coming up with these numbers, which are nothing more than comparing them and looking at opportunities into the future and risks into the future. So hopefully this is something that you guys can play with. Anyone else, just go to the handout section and you can download this Excel spreadsheet, or if you were to email me at khurley@hurleyinvestments.com, again, khurley@hurleyinvestments.com. You could do info@hurleyinvestments.com. It'll still come to us, and we can get this emailed off to you.